Hey everyone, welcome back to Retire by 40. This is a channel where every week I go over my portfolio and talk about the market. This week is a special episode because I am going to be going over my last quarter and seeing the performance, seeing the gains, and then after that I am going to go over my personal debt and the remaining debts that I have going forward. Now, before that, as I do with every week, I'm going to talk about my portfolio first because it's going to be the quickest. So, the first thing is you might have noticed if you've been following is that I have sold basically all of the Apple shares that I owned. I used to own about 90 shares, now I own 7. So, what I did was when Apple went over a certain threshold where I was making, some money because it did go. Apple was rising quite a bit within the week. This week, I sold because I wanted to cash out of my 90 shares and kind of move them to another account. So what I do with Robinhood is that I like playing around with Robinhood, and I have been neglecting other accounts. For example, my IRA. I don't really do a lot of trading there because I primarily focus on Robinhood, and I didn't like that. So what I did was, on my Vanguard account, I have primarily all my allocations in Apple, equaling about 65 shares, and I'm gonna move that there. So I'm still holding Apple. I'm still bullish on Apple, but I don't have it in Robinhood because I like playing around in Robinhood. And my IRA was the money in my IRA was basically just sitting there, and I'm making money for me, which is safe, but it's also kind of, I mean, like, what am I doing, right? So that's why you'll notice Apple's pretty low. Now the other thing is that I am doing Robinhood. I don't know when they released this or when the app got updated for this, but you are able to set a recurring schedule for investments. So I kind of want to play around with that with Robinhood. So if you don't, if I've been reading a book called A Random Walk Down Wall Street, and in the book, basically the whole premise is that the whole market is random, and you can't predict it. No matter if you use fundamental or technical analysis, the market is random, and you can't play the game because it's all random. You might win some, but since it's random, you're gonna stand to lose about as equally as you're gonna win, and that kind of cancels it. Your winnings out. So with this automatic investment, what I plan to do is to set up recurring schedules for companies that I think are doing well. And then when I think when I've gotten enough money from them, or whenever I feel like it, basically, I'm gonna sell, and then have the recurring payments like kind of uh, buy back into the company. So what I mean by that is, for example, SPHD, right? I bought 7 shares, and then I think the recurring schedule is like I'm putting 20. I'm putting $40 a week. So like let's say 3 months from now I made like $100, right? And then I'm like, hey, I want to cash out. So I cash out and then have the recurring payments go back and reallocate. Now, what I kind of want to experiment with this because that is totally random, right? You keep putting money into the market, and then if you see a profit that you want to take, you cash out, and then you start over with the randomness of investing in every week or every day. So we'll see how that works out. Hopefully that works, but I like testing new things out with my Robinhood account. I've been playing with options. I've been playing with a lot of things. This year has been a pretty good experimental year, and it has been working out. I mean, I haven't I haven't been losing money. I wouldn't say I've been making a lot of money, but I haven't been losing a lot of money. However, it also, I mean, it does have something to do with the good the good economy that we've been going surprisingly even during the pandemic. one last thing before we move on, and it ties to the good economy that we've been having. Papa Trump has been diagnosed with COVID, so I don't know if Papa Trump gets taken out, if the market's going to continue. So we'll see. I mean, yeah, we'll see. I've been worried about the election because of riots and yeah, we'll see how the economy keeps going. I'm not too uh, positive that the economy would be good if he gets taken out. Now, to summarize this week, you might see that we got one of the biggest gains that I've seen in ever, or I guess in with that I've marked down, and I would say ever. I don't think I've ever in one week made $1,200. However, as you can also see, it is my biggest gain, but it's also not the it's I've lost more. My biggest gain or loss is my loss still, and I that sucks, but still a good week. And you might also see that my average weekly gain is 165.88, which is beating my target, which is 134.62. I think last week it was slightly below. So again, this week was great for me. And yeah, moving on to that, you might have also realized that I contributed quite a bit, and that is for my ESPP account. So basically, every quarter, money that I have been contributing, every paycheck gets I'm allowed to buy the company that I work for stock, and that just so happened to be sometime this week. So that's why moving on to the next segment in a little bit. That's why I've categorized this section in yellow as quarter 3, because it just coincides with the contributions that I got from the company, essentially. So besides that, though, I also did make $100 deposit to Robinhood. I'll talk a little bit more about the contributions that I am going to be making, or have made this year, also in the quarterly breakdown. So just hang tight for a bit. Other than that, though, I think it was a good week. Let's continue the good week going forward. Although the markets did tank a little bit on Friday because of the Trump coronavirus news. So if there's more uncertainty, or if he passes away, those gains might just go away. Hopefully not, but we'll see. All right, so enough of that. Let's talk about the quarter 3. So every single cell here is it's referencing a cell from the main table here, right? So I'll briefly explain everything. Total change is just going to be the current amount that I have right now in all my accounts minus the total that I had the beginning of the quarter. Percentage change is just going to be the total change divided by the total I had in the beginning of the quarter. Total contributions is just going to be the sum of the contributions in the quarter. The market gain is just going to be the weekly gain in the whole quarter. And then market gain percentage is just going to be the total market gain divided by the total I had at the beginning of the quarter. So briefly, it's a decent market gain. It's a 6%. So the way I have set this up is I am aiming to every year, and starting this year, I want to get 5% back. 25% back from the market. Now the average is about 12%, so this is very, very bullish. This is very, very probably unlikely, but that's what I'm aiming for, right? Now it just so happened that 25% equated to like $7,000 this year, and divided by 52 weeks, it's 134.62 per week. Now, in the what I have recorded, you can see that I'm well above that, and that's decently good. However, the market gain here is about 6%. So uh, this is just a the quarter summary. So 6% times 4 is 24%, or about 24%, and it's going to be slightly less because this isn't exactly 6%, right? So I am on track, but still slightly below. I'm somewhere between 24 and 25%, and sorry, 23 and 24%, and my goal is 25%. So, depending on how next quarter goes, I might hit it or I might not. Now, it kind of it sucks because I didn't record the whole year, unfortunately. But this has definitely helped me out to see how I've been going, how I've it's been helping me see how I've been doing every week, and seeing how close I am to my goal, and if I am in line with it or not. Now, moving forward, I did promise I would go over my credit cards. So I did start this last year, and I didn't start it right away after I graduated college, unfortunately. So you won't see the real total here. It was slightly more than that. It was below 20,000 for sure, but it was not 14,489 when I graduated college for credit cards. Now you might realize here that I have paid all that off, and yay me, yeah, I've paid it all off. Uh, I stopped kind of tracking it for a bit because I have a decently good memory, and every I've been meticulous about this. Every paycheck, I check every single credit card and pay off what I can. Uh, so I've been this definitely helped me because in the beginning I was seeing, oh my god, that's a lot of freaking debt, and it would motivate me. But after a while, I just got used to going into all my accounts and just paying it off, or paying off more than trying to get out of debt. I made this help me make a good habit of checking all the accounts that I needed to, and making sure my debt was decreasing, is what I'm saying. So definitely, I recommend this to get out of debt. You see, especially with charts, man, you really do see where the progress. So, like for example, let's say you like this is what 4 months in, you're already seeing the progress, right? That you're seeing that I was so close to $16,000, and now I'm like below $12,000. This motivates the heck out of me. Now you might be different, but I would definitely try this out because it's nice to see that the what you're doing to get out of debt is helping out. Before moving on, like I said, this doesn't tell the whole picture. It's pretty accurate though. I would say I think I ended with $17,000 of credit card debt, so it's decently accurate. I also had a car loan, or not a loan, a loan. I bought a car and I took out a loan, and I was paying it off when I was going through college, and then when I got my job, that's the first thing I paid off. So I didn't track it, but I paid off a $15,000 loan, um, for a car, and my credit card debt, and I'm also tackling my student loans. So, in summary, the car is paid, uh, and my credit cards are paid off. Now, the next thing would be student loans, and I haven't been good about tracking this, mostly because of the coronavirus. All students, or a lot of people that had took out government student loans, don't have to pay it off, and there's no interest being charged. So I've been kind of taking advantage of that, and paid off my credit cards first because they have a higher interest rate. You should be paying off higher interest loans first, and thanks to the forbearance, I think it's called, I was able to focus on the important things, and now I'm able to focus on the on my student loans. So I did end with about 40,000. Again, started this pretty late. I already tackled some debt when I started it, so it's not as accurate, but I did end with about $40,000 of debt, student loan debt. Now, this doesn't do a lot of justice. So let's move on to what I set out to contribute per account this year. Now, this a little disclaimer: I am not including two things, and one of them is my 401k, and the other one is my contributions to the employee share purchase plan for my company stock. The reason why I'm not including them is because I've been this year I've been kind of messing around with the numbers. You can set the percentage contribution per account, so for the 401k and the SPP plan, and I've been messing around with them to see what I like. So I can't get a firm number on it, but I will say that I've been moving them in tandem. So, for example, if I change 401k contributions to add 5%, I would lower 5% from the ESPP plan. So the movements have been in sync with each other, just opposite. It's just been hard to track what I've been contributing to and what my goal was, because I don't remember what my original goal in the beginning of the year was. Now, yeah, so Robinhood, I've committed to contributing $10,000 this year. IRA $6,000, and then student loans have been I committed to paying off $10,000. So to date, I put everything in that I promised in my IRA, and then in Robinhood I have $3,500 left, and $7,000 left in student loans. So the remainder of this year, since I don't have credit card debt anymore, I don't have the car payment. It's all gonna be the only debt I have now is student loans, which will be easy to tackle the remaining yearly contribution that I have left. And same thing with Robinhood. I don't really, I'm not paying for anything else. So any money that I don't spend from my paychecks will directly go to either my Robinhood or the student loan account. So in summary, the by the end of the year, my projection for my student loan account is to be $25,000, and then going forward every year, I'm going to be paying off $5,000. So it's going to be 25,000 divided by 5, or about 5 years for me to pay this off, give or take a couple of years because of interest. And the reason I'm doing that is because student loan, the interest is so low. It's I think the highest one for me is like 4%, and so I have different loans. So the lowest one I think is like 2%. It varies, is what I'm saying, but the highest is about 4%, really low. I can beat it with investments and so on and so forth. So I'm not worried about that. And if I just knock out the whole balance of my student loans, it doesn't really help me out. I don't think so. I mean, it gets me out of debt, but this is relatively safe debt, and I'm treating this debt as a tool to help me make money elsewhere. So that is my portfolio update for the week and for the quarter. For what you can expect, or what I could expect for quarter four, is that I am gonna obviously keep contributing. I'm gonna be contributing more. So these for the most part this quarter, the contributions have been to my 401k, and then the big lump at the quarter end for the ESPP account. But for the next quarter, you're gonna see the same thing. You're gonna see the big 2289 to the SPP account, but I'm also gonna be contributing. I think it was $3,500 to my Robinhood. That should push me, if all things equal, to having a total about $50,000 by the end of the year, which I'll be happy for, because that's 5% to a million. All right, guys, that's it See ya.